Welcome back to Liberty and Finance. We're always delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, March 14th, 2023. Andy, thanks for coming back on Liberty and Finance.
Good to be back again, Dunnigan. The world is getting crazier once again.
Yeah, and these things seem to happen over weekends. It's I don't know. People say there's no conspiracies in the world or whatever. Some people do. But anyway, it just seems to be there's this playbook that keeps getting run where the officials all say, everything's fine. We got this in hand. Don't worry about it. And it's not going to take extraordinary actions. On Friday night, that's what Yellen said. And then by Sunday night, it's like, okay, this is going to take extraordinary actions. We're standing up a whole new facility we never had before. We're going to bail people out. We're going to break all the rules. We're going to not do what we said we were going to do since 2010 with the Dodd-Frank Act. But don't worry. That means everything's cool. That means everything's fine. So can you bring us your thoughts on this kind of, I don't know what you'd call it, this whirlwind that just happened this weekend with multiple banks, the second and third largest banks ever to fail in the U.S., et cetera?
Sure. Well, first of all, I mean, how bad is it? I think it is pretty bad. And I ask, when was the last time that the Fed and the Treasury and the FDIC held an emergency meeting on a Sunday, followed up by a speech from the president telling Americans, as you say, don't worry, everything's okay. Look, they've lost all credibility. First, they told us there was no inflation, and then that it was transitory, and then it became structural. Then it had peaked, but then it reemerged, and it's all crap. I think they're very scared, and the time to be scared is when they tell us not to worry. I think that is really the time to be scared, when they've got everything covered, when the taxpayers won't be burdened for this, when we know that that's really not the case. Yeah, they may not bail them out with taxpayer money, but they will pay for it with newly created money. They try and tell us that it's the money coming from the fees that the banks pay for the FDIC, which covers 0.03% of the deposits that are north of $9.5 trillion, backed up by $125 billion in assets. We talked at length about this over and over and over again. I have a bad habit of repeating things over and over and over again that are very important to me. So it's not a bad habit to me. It's just nailing home what's important. What did we talk about ad nauseum? The November meeting of the FDIC Systemic Resolution Advisory Committee. They told us this was going to happen. And let's talk about what really is happening before we talk about what they've done. And it's simple, but first an explanation of how it all works. And when you make a deposit at a bank, that deposit is not an asset of the bank, it's a liability. And so the bank needs to offset that liability with an asset. And that asset is usually a bond, a treasury bond or a mortgage-backed security bond. And during the pandemic, Biden removed or relinquished all of the reserve requirements that the banks had. So there's very, very little cash on hand to meet customer demands. And if there's even a small run on the bank, like we saw, the bank is forced to then sell bonds at a huge loss to meet customer demands to get their money back. And the reason those bonds are selling at a huge loss is that over the last decade, the bonds that have been accumulated by all of these banks, the treasuries and the mortgage-backed securities, probably average 2 to 2.5%. And with rates hovering at or near close to 5% right now, those bonds on their balance sheets have lost over half their value. So when they're forced to liquidate said bonds to meet demand for these withdrawals, it can render a large bank insolvent in less than 24 hours. Like we saw last week. And you know what? The FDIC cannot handle this. Their insurance fund, as I mentioned, is 0.03% coverage of all bank deposits. So if one or two banks fail, it will drain it all. And so the only way to save the depositories was to monetize the banks, print more money to make them solvent and destroying the value of the currency. I guess they have to ask themselves, do we save the dollar or do we save the banks? And obviously they have spoken, rendering the dollar dead on arrival. But look, math is going to solve this problem at some point, and reality is going to solve this problem, and hyperinflation is going to solve this problem. This is exactly what I've been saying, talking about this for the last few weeks. But the problem is too much debt. And all of this debt has to be repaid one way or the other, either by the buyer or the lender. And, I guess they're going to try and pay off this debt done again by inflation. They have signaled that that is going to be their choice, that quantitative tightening be damned. It's time to open up the floodgates, because there is no way. Look, in 08, when they should have let the forest fire cleanse the forest, the underbrush, instead they papered it over. And the Fed's balance sheet went from 800 billion to 9 trillion. How are they going to, with a $9 trillion balance sheet, most of which is underwater because the Fed is loaded up with long duration, low interest rate assets, against, all of these obligations that are short term, whether it be the reverse repo market or the reserves, the excess reserves that the commercial banks are parking with them at 4 and 5%. They're underwater, highly underwater. How are they going to cover another $9 trillion in deposits? And that's, assuming that some go bad. But the point of it is that they set a precedent here. And how can you bail out one bank and not bail out the next 2 or 3 or 4 that go under? And this is a bad deal. This is signaling, in my opinion, the beginnings of I don't want to be an alarmist and say hyperinflation, but this is signaling a massive wave of inflation. Well, the funny thing is, as they print more money to bail out the banks, it has to lead to higher interest rates to compensate for the inflation, which is only going to hurt the balance sheets of the banks more. And they'll have to bail out more banks by printing more money, which raises interest rates higher. It's a vicious circle. What they are doing is absolutely ludicrous, and it's embarrassing. And quite frankly, it's quite good for our business, because they've signaled the end of austerity and more of the same, continuing deluge of inflation.
We have a question from Chris Friesen, which is general, I think, over everything that we're going to be talking about tonight, is why do you think the media doesn't ask the questions we're interested in getting answered?
It's a good question. And look, maybe Fox has talked a little bit about it, more so than most. But when you realize that every radio station, newspaper, magazine, and television station is owned by 4 companies or so, the information is filtered. You're the news, Dunnigan. I've been saying that. You're the news. And all the people who shows I go on, they're the media. Our media has lost credibility. Our media has kept us in the dark on so many things that are important and relevant. When I did that speech at the Rick Rules convention in May, I started it out by saying, now I'm going to talk about 5 mile markers. And I want you to ask yourself, how many of these things have you heard about? And so many of the things that are important aren't being discussed by the media. The one thing that I did hear last night on Laura Ingraham was that she was talking about the 2024 election and said it has to be about the economy. She used the phrase, it's the economy, stupid. Kind of, I think that was the phrase back in 1980 that Reagan used. I'm not sure. But anyways, the bottom line is that this is a situation where they have to start noticing what they're doing. They have to stop worrying about woke agendas and think about what they are doing. They're destroying the value of the US dollar. And at a time when, what have we been talking about for 3 years? A coalition, a group of countries moving together against the idiocy, the brain dead monetary policy of the West. And this is just adding fuel to the fire. God help us if Japan and China dump their 2 trillion in treasuries. You think we have problems now holding interest rates down and keeping things afloat? If that happens, it's Armageddon. And these types of decisions that we are making don't inspire confidence as the world reserve currency. And quite frankly, why would anybody? Saudi Arabia said we're going to join the BRICS because we're going green, right? They're joining this group of humanity, 80% plus of humanity that's joining the BRICS nations that is not going green, and we are going green. So not only are we going green, but the money that we would pay them for their oil is being massively depreciated by inflation, and the treasuries that they used to buy with the proceeds are yielding a negative real return. Where the hell are we? We are the world reserve currency that's gone upside down and gone mad. And I think when you talk about, is this precipitated? Was this a controlled demolition? I mean, you couldn't do more stupid things if you wanted to as an administration. And we've talked ad nauseum about the litany and that this massive amount of dumb things that they keep doing in the eyes of the world, and now here at home, literally in indebting our children, our grandchildren for their entire lives. And at some point, the debt has to be paid back or you default. So as Richard Russell, my mentor, used to say, the mantra of the Fed, he was saying this back when Greenspan was in there, he was saying the mantra of the Fed is to inflate or to die. There's one or the other. We have crossed the Rubicon of being able to be the world's policeman and fix what ills all of the world, and then do these dumb things here with the currency, that what the moves that they're making with our currency are literally destroying the privilege that we've had for 50 years as being the world reserve currency. And it's making the rest of these countries, I believe, really double down on, their conviction that this is the right thing to do, to move away from the West and to break free from this madness, this monetary madness. And I think this is just the beginning of some bad things that will come as a result of this particular day in history.
It's not fair for me to ask you questions that would be requiring like a banking expertise, but I'm still going to ask this one because there's so many that are on these same themes that keep coming up. People are asking, do we think that large banks are safer than smaller regional banks, or vice versa? Do we think that banks or credit unions are safer? Do we think brokerages are a safe place for any wealth to be held right now? Trio Legend says, will a lot of money flow out of U.S. banks and into Asian banks? So any perspective from you, any commentary on relative risk at large banks, small banks, credit unions, brokerages, or overseas banks versus the U.S.?
Well, as the limited, look, a lot of what I would say in this would be using supposition, I guess, as my guidepost. But I would think that the too big to just by the names they give them, the systemically too big to fail bank, whatever that acronym is that they call it, would mean that this is what they're almost trying to do, to push us in the direction of the too big to fail banks that would create too big of a problem. I would have originally thought that these small regional banks would be much better. But I guess, when you look at a regional bank, it's not such a small bank. It's the 18th largest bank in the country with the 33rd largest derivative position of over $27 billion. These banks, big and small, have bought in hook, line, and sinker to taking these absurd risks because interest rates were so low, they couldn't make any money. And so they started gambling and doubled down, and now they're going to get caught and we have to pay for it. So I think the systemic nature puts the entire banking system on thin ice. And, maybe if you took the conspiratorial side of this and said, this is exactly what they're trying to do to create a system that all confidence is lost in the banking system, to usher in a central bank digital currency. Lael Brainerd, who was number 2 at the Fed, her whole policy, her whole mantra, she left, and I'm not sure where she is now, some Washington-based think tank, I think, but she was at the Treasury and then the Fed, and she's a modern monetary theorist who wanted to get rid of the commercial banks. When you look at the derivative exposure by the too big to fail banks, it will bring the entire system down. And when you talk about keeping money in brokerages, yeah, I would think a non-margined account in a place like Schwab would be better, but they're not immune to it either. This whole cesspool is connected. And I think when you look at the risks involved, when rates go much, much higher, it will bring Wall Street down. It will bring the commercial banks down. It will bring them all down. And the Fed doesn't have the wherewithal to be able to do this. I don't know where you put your money. I wouldn't put it in a bank in China. I think a credit union would be better than most, but I would look and see what the derivative exposure is to these banks. That you look at the derivative exposure to all of these banks, it's extraordinary. And this is what the Systemic Resolution Advisory Committee was telling us. I guess if I had to answer that one simple answer, I would say a non-margin brokerage account like a Schwab would probably be safer than most of the banks, but I don't think they're immune to it. And I personally don't want my money in any of these systemic too big to fail banks. Look at Credit Suisse. It's circling down the drain. We've been talking about this for a while too. They're labeled as a too big to fail bank. The Fed gave $20 billion to one of the largest Swiss banks, the second biggest in the world. Why is the Fed giving $20 billion to one of the biggest banks in the world? even the biggest banks in the world are over leveraged. In fact, they're way over leveraged with derivatives. And it's the derivatives that will bring the system down, because the value of a derivative is based upon the counterparty's ability to make good. And if the counterparties are going bust, 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 and they bust and they bust, and all of this daisy chain of firecrackers are going off, I don't think any of them are safe. And they're all undercapitalized and they're all over leveraged. So not to cop out, but this is the whole reason that, I haven't slept in nearly 48 hours, as my phone has been ringing off the hook. People are terrified of being in the banks, and I don't blame them. I did it myself. I emptied out most of my money U.S. bank account. I'm concerned about it. Is it premature? Sure. I mean, I'd rather be early than say, damn it, I knew I should have done that. So no easy answer here. Truthfully, there is no easy answer. And this is the predicament that we find ourselves in. And I'd rather be safe than sorry.
A follow-on question here. Dan Spain says, Andy, are you seeing any issues with your customers having problems getting wire transfers approved at their financial institutions? Yeah.
In fact, I've never had this problem before, but I did get an email today. I'm going to just glance and see if I have it and I can read it. I don't have it, I don't think. Anyways, the guy says to me, he's a financial advisor. And he's the person, the go-between between his client and my company. And he said, we went to the bank, they asked us a whole bunch of questions and finally denied the request. So we're sending it from another bank. I said, I've never heard something so ludicrous. But yeah, we are hearing that. Did a very large order on the client wanted to do it on Friday of over $5 million and was given the runaround tremendously. And they stonewalled him, and he wasn't able to send it until Monday, and cost him probably $200,000. So yes, I have heard that, and I've never heard it before. People always talk about it. I would talk about going to the bank and asking for $4,000 in $20 bills, and the lady said, "What are you doing with it?" That's a big stack. I said I wanted to say something that I didn't, but I said, I have an idea for it, and that's okay that it's a big stack, but. That type of invasive questioning, what are you going to do with your own money, is annoying. But now I'm hearing clients for the first time ever today told me, yes, they would not send the wire. They rejected it, is what he said, based upon the answers to the questions. What are you going to do with it? Blah, blah, blah. If that's not an indictment of the system, I don't know what is. And so, I just hope that people don't fall asleep at the switch here when, they paper this over for a few weeks and people forget about it. Look, I think we have more risk in the banking system now after this decision than we did before, because they may back it up with freshly created fiat money, but your money is in the bank is now going to lose value at a remarkable rate. And I think they've just signaled that they're throwing in the towel on inflation in favor of keeping the game going and not letting the forest fire clear the underbrush. Instead, they'll continue to fool with Mother Nature, only making her more and more and more angry until this whole thing blows apart.
I 2 weeks ago had a client sending a wire attempting to send a wire from a bank. They went down the normal so-called Patriot Act form where you got 8 questions. It used to be 6. Now it's up to 8 questions and more, asking, has someone told you have to send this money? Is this being sent to overseas to somebody who's promised they're going to send you some more money if you send them this money? And all these standard questions to kind of sniff out typical wire fraud. And then after that questionnaire was all done, then the banker started asking more personal questions about, do you know this company? Have you dealt with this company before that you're sending this money to? Well, this was a first-time client. And one of the reasons she picked our company was because of our good, long-standing reputation. And she said, do you know the person personally to whom you're sending this money? She said, well, no, I don't know them. They said, okay, then we're not going to send the wire. So
yeah, that's crazy. That's just crazy. And here's the article right here. It says, for further proof, the world banking system is in major trouble, is that the second largest bank in the world, Swiss Credit Bank, is very near bankruptcy and has received $20 billion from the Federal Reserve to survive, the bank of last resort. They are laying off 9,000 workers immediately. So this is the problem. Why is the Federal Reserve bailing out the second biggest bank in the world in Switzerland and not the Swiss National Bank? This is the problem. We are that close to the whole thing breaking apart. And it's kind of like telling a lie and getting caught and telling more and more and more and more lies to keep the game going. And that's exactly what they're doing, only they're fooling with the world reserve currency. They're fooling with the standard of living in this country, and at the worst possible time. And the people who watch your show have heard me talk for a couple of years about the BRICS, long before it became fashionable, long before everyone was talking about it. And this coalition that is growing is looking for reasons to continue to pull away from the West. And if this doesn't cement the idea that dealing with the West is foolish, I don't know this to be true. But Jim Willey, someone who I think is very smart, I don't know where he got this information, but he said rumor is that that Japan is going to join the BRICS nations. They're contemplating it. I mean, you want to talk about shoving a knife in the neck of the West? If that happens, it's game over. But it already is game over when you realize we were already $130 trillion in debt. On top of, you got your $76 trillion shortfall in Social Security. You have the largest asset of this country being student debt, a $31 trillion debt, $3 trillion deficits, spending money, $114 billion to the Ukraine, and giving pensions to the Ukrainian government when there's a $1.75 trillion shortfall in pensions in this country. Have we lost our damn mind? I think we have. And buying gold and silver is not about getting wealthy for the umpteenth time. It's about protecting yourself from this environment. And do you think there's any coincidence that it was the second most acquisition of gold ever last year by the central banks? The most since 1967 and the second most ever. And it's continuing this month. In January, where these numbers are rolling over tremendously, like what was the number? 192% month over month increase from December by what the central banks bought in January. Another 77 tons. They are draining the exchanges of the metal, using the suppression of the COMEX market to run cover for their rampant de-dollarization. And it's not even that the central banks have all the money. They're closest to the information. They see what is happening, and they are using misdirection, as we've talked about before, to run cover for their global de-dollarization. And these things that we are doing, they're laughing at us and saying, my God, we should move double speed. And I think that's what's happening. And that's why you saw the central banks add 77 tons of gold in January, 192% month over month increase from December. And, this is a trend that is not stopping. Turkey was the largest importer of gold in 2022, and they added 23 tons of the 77, the most the Swiss refiners have ever sent in a month to Turkey. This is our ally, who, by the way, just said they're joining the BRICS nations. Hungary just fired all of their pro-NATO military officers. The world is moving away from the Western hegemony and the Western hypocrisy and the brain-dead monetary policy. And our leaders, by doing things like this, are enslaving our children. And I don't mean to be dramatic, but I mean, how do you look at this any other way? 1 trillion seconds ago was 31,688 years ago. How much do we have to go into debt to realize that it's either default or inflate, one or the other? And you can see by what they just did, they have chosen inflation over the tough decisions. And, it's like hyper stagflation, where the printing press meets the Great Depression. That's where we're heading. And if, God help us, if the BRICS nations really accentuate themselves and issue a gold-backed currency to challenge the West. They've already told us it's going to be a commoditized backed currency. And as Alistair McLeod said on your show, and I believe him, that the Shanghai Cooperation Organization, 60% of global population, is going to issue a gold-backed settlement currency for the entire Eurasian continent. All of these countries, the Belt Road Initiative, 150 countries, the BRICS, another 60 plus countries wanting to sign up, the Shanghai Cooperation Organization, the Eurasian Economic Union. It is the majority of human population that is laughing at the West. And when they flip that switch, if you think it's tough now, wait until China and Japan and the rest of the world dump bonds, dump dollars, and it becomes Armageddon. This is why you need to own gold and silver. And this is why you cannot wait to cherry pick the low entry point and think you're outsmarting the market. Look at what happened the last 2 days, Don. Again, you can back me up on this. I've been sitting here for 3 weeks telling everyone that supply, or 2 months, that it's unbelievable. The supply is plentiful. The premiums have come way back down. And what happened? It's almost all gone again. And it's going to get harder and harder to get. And if we keep going down this road, once again, it's going to get impossible. And I'd like to add one other thing to that. What is happening in the United States? The red states, Idaho, Wyoming, Missouri, Kansas, Tennessee, Mississippi. These states are waking up to the lunacy and the brain dead monetary policy. And they are telling their people for the first time, gold and silver are money. We're going to hold it in our treasury and you can use it for all debts, public and private. How many people are going to be awoken to gold and silver when these states are starting to push back against what the Federal Reserve is doing? And like the representative from Idaho said, standing up in the legislature, we need to let our Idaho citizens do what the central banks are doing, buying gold and silver. It is going to light a fuse under the demand. And every time I've said the same thing on your show about Rick Rule saying 0.5% allocation across the entire financial matrix in the United States will be a memory, and 5 or 10% allocation will mean there'll be nothing left. A 10% allocation is what 5% allocation is what financial advisors tell their clients to own in gold, which is nonsense, woefully under cap or under accumulated, and that would be a tenfold increase in demand. So yeah, I mean, I'm fired up, and I think everyone else should be and needs to realize that this is accelerating this craziness.
There's a question here regarding when people do try to take action for the good of their family. That's what our channel was founded to help people do, to be aware and prepared so they could take effective action to reduce risk for their families, so that people can not only survive but thrive in the times to come for our children and our grandchildren's sake. A lot of preamble. Chris P says, for people who are trying to do that accumulating, what is going on with the U.S. Mint? Do you have any updates?
No, and the U.S. Mint, I've learned that there's a very fine line between conspiracy and reality. There truly is. And when you realize that Janet Yellen, who is nothing but a liar, stands up or is on the U.S. Mint webpage saying we've ramped up capabilities and production, and they only make 14 or 15 million Silver Eagles last year, which is about 25% of what they did a decade ago in a year, in 2011 or 12. I mean, they're making 45 and 50 million. When they call us in July of last year and say, hey, you guys, we're going to decrease production of gold, eagles, and buffaloes by 50% into the second half of the year, when no one was buying gold anyway, just silver. It's almost as if they realize that they have squandered the opportunity to accumulate gold. Maybe they've stolen it from Libya and stole it from Iraq. And where did the 12 billion in gold that the Ukraine sold to fund the war efforts go? And, maybe they have more than they're telling us, but why are they not producing silver eagles and gold eagles in copious quantities when I can buy from Australia or the United Kingdom or South Africa much easier? It's ridiculous. Are they stockpiling it? Why would JP Morgan be allowed to be the administrator of the world's largest silver trust after pleading guilty to and paying a $920 million fine to the Justice Department for manipulating and getting a slap on the wrist? And their metals desk made $1 billion that year. So they walk away up 80 million plus, pay a dinky dink fine when they make $1 billion a month in that company, and throw a couple token people in for a short jail sentence and probably have big bonuses when they come out. In other words, why did Bart Chilton, why was he told to back down? Because it's a political decision. And when JP Morgan, he insisted to his superiors they be prosecuted. What I'm getting is this their way of stockpiling gold and silver? We know that they exhausted their silver stockpile. years ago. So are they making it that difficult? Are they trying to stave off a bank run, or are they just trying to accumulate lots of gold and silver? Whatever you think of, it doesn't make sense that they're not making it easier for the people in this country to protect themselves with US mint products, which are the most expensive of all of the 6 major mints. And it's easier and less money to have something sent from across the Atlantic Ocean, thousands of miles away, than it is to get it from West Point, New York in the US Mint. It does not make sense. So no, I have no idea. It's lunacy.
We have a follow-up question here from Jay, and it's kind of going into this strange new world that we're in and that we're heading into farther. As a precious metal dealer, Miles Franklin, when will the dealers stop accepting fiat currency for gold and silver coin? So there's a couple parts to that question. I think if you unpack it, I'd like to look at it in 2 steps. One question that keeps getting asked month after month, year after year is, if you believe so strongly in gold and silver, why do you take fiat currency, which is worth nothing in the end, for gold and silver? Why are you giving away good stuff for bad stuff? Then that means you don't believe what you're saying. Okay, that's number one. I know you've dealt with that before, but let's just cover that again. I know, and I think the bottom line of that comes down to not realizing that any merchant who deals in any goods, even if they believe in the goodness of that, if it's a boat seller selling boats, or if it's a food seller selling food, those are good things. Shoemaker selling shoes, it doesn't mean that they don't want those things. They may probably got into it because they were interested in that in the first place. They value it, they believe in it. And you explain, I won't go through, but you've explained over and over again how you bought stuff every 2 weeks since your dad hired you 33 years ago and all that. Okay, the second part of the question is one that I've kind of probed you on before, and that is, what is the end game plan for not only Miles Franklin, but any company you could extrapolate that to how to function in a world where maybe the credit markets are locking up, or the banks aren't being able to, people aren't able to send their wires to pay for things, or the COMEX market isn't functioning because they can't get a live spot price. So when the system is breaking down, systemic risk of the system is why people were rushing into gold and silver. But what does it look like, or what are those times when we can't function then as a dealer to help people continue to do that if the system is actually breaking down?
All right. So if the first part of the question is, I've been selling gold and silver for 33 years when nobody wanted it, when it was $252 an ounce and $3 and $4 an ounce in silver. I've been accumulating it because it's wealth. And I mean, I'm not Bill Gates. I can't buy everything up. I've been buying it every 2 weeks. I believe in it to my soul. I tell every one of my employees when I hire them, you better buy every 2 weeks. Don't let me find out you're not. I mean, that question I find to be incredibly naive. Like, you know, I built a business from scratch, from nothing, coming from nothing, because I believed in something, and I had strong enough fingertips to hang on for 33 years to finally get to a point where everyone recognized it. And yet it's still only 0.5% of the entire allocation in this country. So yeah, I believe in it, and I'm the minority who believes in it, and I buy it every 2 weeks. And I think it's the road to financial freedom, and I think it is the road to financial salvation when the what hits the fan. And I'll sell it independent of what I buy. I'm not selling my own gold and silver, but I will sell it until I can't any longer. And as far as that, what does it look like when the what does it look like doesn't work anymore? If the COMEX breaks, no one can, for a period of time until something is figured out, can hedge their inventory. So holding inventories will be detrimental. If money's not flowing, we'll shut things down until it does again. I mean, it's a scary situation to even contemplate things like that, but they are a reality. So when you talk about incentivizing, look, people are motivated by greed and by fear. In the last 2 decades, people have been motivated by greed. You go back to 1982 even, and you see interest rates going down in a steadily 45-degree sloping angle, creating tremendous value in traditional assets. People were greedy, and they were well rewarded by putting their money into stocks and bonds and real estate. But let me tell you something, what I witnessed yesterday and today, that fear where people are calling me at 1:30 in the morning, and I answer because I'm doing paperwork. Oh, I'm so sorry, Andy. I'm calling from California. I thought I was going to leave you a message, but while I got you, can I talk? I'm terrified. And, I think that there is nothing that will motivate people quite like fear when things start to break apart. We have lived under a period of time where it is our birthright to live better than our parents and our grandparents. That's what we always thought. And I think that, when people say, well, when the market breaks it, it always comes back. Look at what it took to get it back from '08, an expansion of the Fed balance sheet by over $8 trillion, all of it in interest-bearing assets, U.S. treasuries and mortgage-backed securities, to lower interest rates, to make the stock market and the housing market seem better than it is, to increase speculation and debt accumulation. It's all a facade. And when it comes down, when you talk about credit, the amount of credit that is needed in this system is paramount. Bill Holter talks about the amount of credit needed to bring a loaf of bread to the market. The loaf of bread, think about it. The farmer goes on credit to buy the combine, the diesel fuel, and the seeds to plant his field. When he's done harvesting, he takes that grain and sends it by truck to the flour mill. The trucking company is on credit to buy the trucks and the diesel fuel, and then sends it to the flour mill that's on credit to run the flour mill, and then sends it back on the truck that's on credit to get it to the baker, who's on credit to make the bread, who's on credit in the truck again to send it to the grocery store, who uses credit. And if credit dries up, it all dries up. It's a situation where the just as bullish, and again, some of this is, hyperbole and tongue in cheek a little bit, but you get the point. And just as bullish as easy money and abundant credit was for the markets, where hedge funds can borrow at next to nothing and plow it into assets, make a fortune, where companies can buy back their shares by borrowing money at 1% and make a fortune, pay off those debts with no problem at all. It will be equally or exponentially more bearish because of the leverage and the derivatives as they yank the credit back and make it more difficult. And I think that's exactly what's going to happen. That's why you see $2 trillion in the overnight repo market. The banks don't want to lend into an economy they know is fractured. They would rather get 4% with safety than make 4 times that, 5 times that in a credit card, or twice that in a mortgage or a home equity loan. The writing is on the wall. And when the FDIC told us there were going to be breaks in the system in November, more people should have listened. This was a wake-up call, and watching the fear, which was oozing off of people as they called us over the last 2 days, is exactly what will happen. And it will happen over a weekend. I always said, when the BRICS make this announcement, it'll be on a Sunday night when we're all asleep, and we will wake up to limit down across the board on all the markets, and a whole new reality when Saudi Arabia and OPEC says, hey, thanks for the memories, we're moving to the BRICS commodity-backed currency, and with the rest of our OPEC producing brothers and sisters on the Belt Road Initiative. It's coming. So yeah, I think what we saw yesterday was a precursor, and them doing what they did was in an effort to pull us back from falling over the abyss. I think it was that close to happening, and I wouldn't doubt for a moment that they're reliquefying a handful of banks under the table right now and not telling us about it. All these banks that are on the cusp of failing as our dollar becomes worth less and less and less and less.
One of the ways that historically people have tried to manage their risk if they don't trust the banks is to withdraw their funds. And in this case, if people withdrew, whatever cash they had, whether it's a pocket full or a shoebox full or a suitcase full or whatever of cash from the bank, but then wanted to be able to get precious metals with it, it's difficult to do because of all the reporting and the cash transaction limits and that sort of thing. Can you talk us through that, at least from a practical standpoint, if people are wanting their money out of the bank now? You say, well, where do you go? Because all you go is into another institution, your stock market, or stocks, bonds, and real estate, unless you go into precious metals. But to get it into precious metals with a boatload of cash is not necessarily easy.
No, it's not easy. And I mean, I've been telling people look, I'd buy a farm if someone gave me $20 million. I mean, I'd buy a farm. I'm not a farmer. I did plant 90 bushes in Minnesota. I dug holes all the time. It was my way of blowing off steam. I'd put on my headphones, listen to the Twins game, drink a beer, and dig 90 holes and plant bushes so I could figure it out. But short of that, I think the only place that I would even contemplate, and I almost want to gag saying this, would be 90-day treasuries. I would get out of the banking system. And, there's risk in 90-day treasuries too, but to get 4% on a 90-day treasury backed by the government is going to be the only other place I would leave my money, if not in precious metals. And I am way, not the poster child for Finance 101, but I don't see any place in traditional assets that I feel comfortable. And I made a very large personal purchase myself Sunday night when all this happened. I thought to myself, man, if I'm yanking my money out of US Bank, what's the public doing? Because it scared me enough to do it. And on a Sunday night, not having any idea what the market was going to open up at. And I own one of the largest metals companies in America, and I've been buying it for 33 years. I don't care. To me, it's wealth. And I would rather rely on wealth that has retained its wealth for 5,000 years after everything the world has thrown at it, from depression to hyperinflation, to wars, to pandemics and everything else. And what is the only asset that every central bank owns? Gold and silver. And so I think that, yes, not to move away from your question. Look, yes, you have no choice but to put that cash back into the bank. The reporting requirements, our banks freak out about that. So look, I had an elderly gentleman who was told today he could get $400,000 in cash. And he went to the bank and said, should I do that? I said, no, you shouldn't do that. But, better off buying the gold and silver. But they were going to give him $400,000 in cash. I can't believe that, but it's what he told me. You have that kind of cash, you're not going to be able to do anything with it without filling out a Form 8300. And most companies like ours are not going to want to take it. So leave it in the bank and send a wire or send a check and do it as fast as you can if you're that concerned about it.
Back to the question about where's the metal that should have been coming out of the mint. One of the most popular forms of metal in the last 3 years coming out of the U.S. Mint hasn't come out of the mint since 1964. And that's junk silver, 90% constitutional silver currency. Anonymous says, Andy, do you have any ballpark estimate of how much, quote, junk silver has been melted down over the years and how much has survived?
I have no idea, but I'll tell you that I have standing orders for $1 million worth right now. And I really can't find any. We sold a bunch recently and I had a lot of it, but this is always, to me, an indication of what the supply is like. Why? Because you can't reproduce something that hasn't been made since 1964. Well, what happens if the mints go offline? A couple of them, even. If you realize there are 6 major mints in the world, and when they shut down or go offline, that's it. You got a handful of refineries, but they can't keep up. So, a lot of, people, what's the old saying? You never realize how much you value something until it's gone. Well, people take for granted. And I oftentimes lately, I find myself thinking, even late at night, like, why are the mints selling their gold? Why are these countries doing it? I could see that stopping. You asked me what could put me out of business. The mint saying we need to nationalize all of our country's gold and silver. It needs to be held by the government. And I would think they would do that before they would confiscate it. When countries like China and Russia are promoting it to their citizens, in this country, so few people own it, it wouldn't make sense to do that. But I could see the mints just not selling to the West anymore, or just keeping it for their own citizens or whatever it is that they're doing. I think about that a lot lately, like where we're going, what is the likelihood that they continue to release Australian kangaroos or UK Britannias or South African Krugerrands? Isn't it in their best interest to not? We've lived at a period of time that was orderly and systematic. And if that all breaks down, then what? So, I think this is a lot more than it used to be. And fortunately, the people who have listened to you, Dunnigan, for quite some time, and even when you were reluctant preppers, I love that name. No one prepares willfully. Most people prepare reluctantly because they don't want to think about the potential. Just like filling out a life insurance application, you do it reluctantly. You don't want to think about your own mortality. Well, wake up. We're all going to die, and all good things come to an end, including the World Reserve Standard. And this is something that, when it happens, it will overnight, everything will change. There will be no metal left. The public will be caught off guard because, as that person said earlier, where's the media through all of this? Why aren't they telling us? Why don't you ever hear that Social Security is $76 trillion in debt? Why don't people know how big a trillion is? I mean, why are these little questions that seem so obvious to me? No one knows.
Yep.
And I think that when you put it together and start to listen and look at the balance sheet of the world reserve currency, where the largest asset is student debt, 31% of our asset base, it should say a lot about a country that's 130 trillion in debt and making idiotic decisions with the monetary policy, and in this case, backing up banks that should have been allowed to fail. That is the law. They should have allowed it, and now they've just set precedents that will only hasten the demise of the dollar.
I just realized we're 3/4 of the way through the hour, and I haven't given you a chance to tell people what you have available for a special for the next week.
You know, Dunnigan, my brain feels like a Nerf ball. So if you could pull up that.
Yeah, absolutely.
I've just been working so darn hard. Okay, so these are Krugerrands, Britannias, Kangaroos, 2023, 379 over. And then I think we have some Italian 10-ounce bars, which are amazing also. You know, the Italians do things this is going to sound weird, but they're sexy bars. They're really, really beautiful bars. And kind of like a Lamborghini, I guess. They do things pretty. They're really nice bars. And look, we stocked up on a lot of stuff leading up into this. And I told our operations to buy everything that wasn't nailed down once again, just like we did in 2020, because I don't think we're out of the woods by a long shot. So good options at premiums that haven't gotten stupid like they were. These are good prices, not far off what we sold them for prior to 2019. So good availability, good premiums, crazy times, and important to realize that. It really is.
We've gotten calls several times this weekend and this week from people saying, do you have anything left? And yes, but we are running out of some things. I mean, for a period of time yesterday, we were out of American Gold Eagles. Then we ran out of the Canadian Silver Maples that were on special. Then
these are while supplies last. I mean, we have been doing mid-7-figure orders the last few days, and several of them where people call and say, I want to spend $2 million. I want to spend $5 million. That doesn't happen all the time. It's happening now. And that's what happens when people are afraid of losing what they've worked their entire lives to save. And I don't blame them. I did the same thing. I don't blame them.
Any distinctions between these coins, if the people should be aware of in terms of anything about purity, reporting, anything like that people should?
All three of those coins there is no reporting. They're all great. The Britannia is the King Charles version. The Krugerrand from South Africa is I love it. I think it's a really neat coin. The only real difference would be the Kangaroo. Like the Maple Leaf, it's the only other 4.9 fine pure gold coin in the world, and they come in mini mint boxes of 250, while the others come in boxes of 500. And I reluctantly put the prices here where they are, because I have a feeling that they're going to move up real soon. And I'm telling you that these premiums and this availability is while supplies last and until markets change, because I have a feeling if things stay where they are, you're going to see premiums continue to rise. There's no other way I can restock the shelves without paying higher and higher and higher premiums. This game of trying to figure out what premiums are doing over the last 3 years is making me gray, and it's hard. And this is a sweet spot, and I'm imploring people that are thinking about doing this to not say, darn it, I should have done that. I heard that a lot this week. I should have done it last week. I should have done it last week, and it was cheap. And, they wait until it's confirmed, until they're frightened. And you talk to a legendary investor like Rick Rule, and he will tell you that the best investments he ever made is when no one else wanted. And I remember him telling a story where he bought an investment that he knew was the right place to be, and it got clobbered, and it got cut in half, and he doubled down on it. And it ended up making him millions and millions and millions and millions of dollars, and all of his people, and have conviction that you're right when everyone else around you would think you're crazy. Well, that's been the way it's been for us, Dunnigan, for a long time. And I think yesterday was a glimpse of just what happens when we are proven right. And even though you could argue for a period of time we've been wrong, even though ultimately we will be right, because this is a high stakes game. And when I say wrong, I don't think we've ever really been wrong. Our timing has been off. It's impossible to be right on timing, but you can see the progression of these events are growing with severity and growing with frequency, and as is the idiocy and lunacy of the monetary and fiscal policy of this country that is only going to incentivize the rest of the world to gobble up and compete with people in North America for what limited supplies there are, being that all three of those that you just showed come from across the Atlantic Ocean. So it's not just North America that's buying that stuff. The rest of the world is in trouble too. And, maybe no more so than the UK, than Australia. And South Africa's on a little better footing. They're joining the BRICS. So, and Italy, these are all countries where I would think very quickly their people are going to wake up to alternatives to fiat currency.
One more comment that you kind of mentioned, but as far as if and as we expect, premiums will be rising, then that means even if we aren't out of the inventory of these specials, these special prices that are advertised here can only hold as long as it makes sense. If we go upside down on these to where the wholesale price rises to the extent where we can't sell these, but we have to do it at a loss, then we'll have to adjust that. So these prices
are
based
that we have to do them at a loss, because it's that we would sell them and not be able to replenish them unless at a loss. And so I guess you could say that as the cost to replenish them goes up, and it goes both ways. We were buying stuff in October and November that we didn't receive until after the new year. And we paid $2 an ounce more for them than we were selling them from when the premiums somehow crazily crashed. I don't think crazily is a word, but you know what I mean, crashed out of nowhere. And it goes both ways. In order for us to continue to have product to sell, we have to follow what it costs to buy them. And when the distributors and the mints jack up the prices, then we have to be able to roll with that as well. This is, if you look at our prices, we're as competitive or more so than anyone in the country, and we're not gouging anyone. I don't need to do that, but what I do want to do is not go upside down when I'm trying to restock the shelves. And we have a business to run that have a lot of expenses as well. But nonetheless, we try to make it as attractive as possible for everyone out there. I so appreciate the trust that the community is showing us. And I do my best to make good on that. But yeah, premiums are something that people have a hard time grasping and understanding. But just think of it this way. It is akin mostly. I mean, the production and distribution costs are fixed. It's the ebb and flow of human emotion, of supply and demand, and external factors like a broken supply chain that we saw, and a pandemic that shut things down. But in reality, it has to do with fear and greed. And there is no motivation greater than fear. And you see another whiff of a banking problem, and I guarantee you will see people freak out. So it's related specifically and totally to demand. And I have never seen demand ever like I did yesterday. And I lived through Silver Squeeze, which was different. Silver Squeeze, we might have done more orders, maybe. I mean, we did a ton of orders yesterday, but it was from new people trying to capitalize on making a profit. This was largely, and you can speak for your clients, on my side, most of my clients are people I've done business with already, and are terrified all of a sudden and are increasing their holdings. It wasn't a whole bunch of new people calling, although there were some. These were existing clients who understand what's happening. Because it's, as that first call or the first question was asked, where's the media? These people know what's happening when they see this. The rest of the country thinks, oh, they fixed it, it's a good thing, thank goodness. No, it's not. It's actually worse that they did what they did instead of letting it blow up and finally correct to find semblance of sanity to which we can regrow prosperity through savings and investment and reinvestment, instead of one that is built upon a house of ever leveraging debt. So yeah, the people who bought this time terrified are our existing clients. I don't know if you had that same experience.
A lot of that happening. Also some newbies at the same time. So just basically a extremely busy rush time of people wanting, and that's a challenge because when everybody wants it now, we have processing delays in getting wires acknowledged. We have orders not being entered before the wire comes in. We have hundreds and hundreds and hundreds of orders backed up and trying to get out the door in the shipping operation. So everybody wants, at the same time that everybody's urgently wanting it now, it means everybody's crowding into the store at the same time. So it's a challenging time. Everybody needs to try to exercise patience and be deliberate, be strategic, and be level-headed, make their decision. I have one funny thing and one heart-touching thing for you before we wrap here.
Yes,
Blue Dog Red Dog says, my stacking goal is Scrooge McDuck's inside swimming pool. So
yeah, why not? I mean, look, that's great. And you're not Scrooge McDuck if you're taking care of yourself and your family and you're out on a limb, right? Because not only can you not really talk about this with your friends and your family and your loved ones, well, I guess you can, your family, your loved ones, but a lot of them will think you're crazy. You have to realize, I think, that you can only save the world one person at a time, starting with yourself. And it can be a lonely existence having these feelings. And, sometimes when this happens, you want to yell, I told you so, but you can't do that. And I think it's great. What that person is doing is securing a legacy for his family. And I think they'll be glad that they did. And I'd like to have that same swimming pool too, but good for that person.
And there's one more common sense one here from Tommy Boy. It's a way to park money off the table that still holds value. It's insurance, common sense, eh? Yes, so thank you, Tommy Boy, for that. And then finally, the last one from Uncle Tony's Garage. Andy is a rock star and a real inspiration. Thanks for all you do, man.
Hey, thank you. I appreciate that very, very, very much. It is something that I love to do. And sometimes I wonder, why, but I do. I love it. And from the very first time we did our podcast in 2020, Dunnigan, and to everyone I've done to this point, it's something that I truly love and I work hard at, and I scour the internet and the information that is available to me to try and make heads and tails of it for this community. And you know what? I'll say it again. In many respects, I'm okay if I'm proven wrong. My youngest child is 15 years old, and I'm afraid for the world that she's growing up in, and my other two kids. And I hope I'm wrong. I hope we can fix what, the problems that I see. Unfortunately, I'm beginning to believe more and more and more that this is going to be a scary time in this country, and that it will get much worse before it gets better. So thank you for all the kind words. If nothing else, I'm not the smartest guy. Alistair McLeod puts me to shame in his understanding of economics and of banking. I hope I just come across as someone who is sincere and tries hard to make heads and tails of some complicated things, and just tries to give my take on it in a sincere way. So for everyone out there, I appreciate it very, very much.
And that does come across, Andy. And by the way, making heads or tails, that's very good. Okay. And I did interview Alistair today, guys. So make sure you're here tomorrow night at 9 p.m. Eastern, 6 p.m. Pacific, because that's when you're going to hear Alistair telling us what he thinks is next in this whole banking. He says we're only in the first act. So that's.
By the way, I will tell you that 2 years ago, he was calling for this. Like most economists, and I would like to call myself an amateur economist, we find that the things we talk about come true. Everything that I've talked about at Miles Franklin for 30 years has come true. It always does. Never. The only thing that has happened faster than I would have anticipated is this BRICS narrative I've been following. But everything else comes true, but never when we think it will. But it does, because when you base your decisions upon mathematics, upon logic, upon economics, it comes true. It will. It has to. Mathematics will win out in the end. And Alistair was saying there would be banking crisis, talking about the French banks 2 years ago. And he's right. He was wrong, but he will be right, because this is a very high stakes game, that the administrations are doing things like this, putting hidden variables, changing the rules at the last minute, doing things under the table that allow the outcome not to change, but the timing of it too. And he will be proven right, just as I think a lot of the things you and I talk about will be proven right. And I hope not, But when you base these things mostly upon mathematics and economics with the sprinkling of old school logic, more often than not, they will bear out. And I would encourage everyone to listen to Alistair. I find him to be probably the brightest mind in this industry, and I listen to everything he puts out, and I read everything he writes. I think everyone else should as well. So if you're listening, Alistair, I think you're awesome.
So that you don't miss a single episode with Andy or Alistair or any of our other guests, make sure you go to libertyandfinance.com, everybody. Put in your name, your email address, click submit, acknowledge the one confirming email. Then you're in. You'll get one email a day in your inbox with our latest interviews and our weekly special. You won't miss any of them. So libertyandfinance.com, name, email address, submit, and confirm. And we've had 1,409 concurrent viewers right now watching us. That's awesome. Everybody, you out there watching this, sharing the information with your loved ones in your household, making the steps are the ones that are going to help your own families and help those that are in your circle of influence. So please spread the word. And Andy, thanks for being here with us again on Liberty and Finance.
It's a pleasure is mine. I'm so fired up now. I feel like I need to go run around the block. The pleasure is mine. Then again, I love these Tuesday night live streams. They're my favorite. So until next week, we'll see you again. And thanks everyone out there. Appreciate it.
Take care, everyone.